Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a one-year daily candle chart of the Russell 2000 ETF, ticker symbol IWM. I've left my lines on the chart like I do each and every week, so you can see how this forecast worked out. And if you recall from last week's report, I highlighted the role reversal concept, where once resistance is broken, like we see here, I mentioned that there's a strong possibility we will pull back to this new support level, and then we'll have to see whether or not the buyers come in at that new support level. And that's exactly what we are seeing right now. As I zoom in here, you can see that we did have a pullback to this role reversal. It didn't touch it. It does not have to touch it. It just has to come close to it. It's acting as a support level. Support levels are not to the penny the general areas. And you can see we have a little bit of a bounce here right now. Now, what does that mean for next week? Well, we have to dig in a little bit further, because if you look down at this little bar right there, that's an increase in volume, and that's on the red candle right there with the oscillators going lower. I think we have a little bit more room to go on the downside here before the moving average comes up and acts as a support itself. That moving average will often act as support, as you can see right here. So we'll have to see whether or not that happens. My downside forecast for IWM is 235.82. And again, for the option traders that are following me on the expiration week report that will come out over the weekend, we're going to be making adjustments to our IWM put spread. We are up about 19% on that. Even though it's a put spread, we made money on the way up. And that's the name of the game, learning how to collect time premium. If you're not an option trader, I will at this point encourage you to at least look at it. Market Rebellion has a lot of educational resources there for you to learn options. It's pretty painless. You just go in and roll, look at some of the webinars, follow along with some of the coaches, and you'll get a good experience there. So that's my forecast for IWM. The forecast was pretty much the same right across the board. As I go to the diamonds, again, this was a role reversal right here. Resistance broken, turn to support. We are pulling back to that support level as well. However, the main difference between the Russell 2000 and the diamonds, as we see here, is that the moving average is already starting to act as a support level. And you could even see there's a smaller role reversal right here from this high. So we could see a little bit of a bounce here next week in the diamonds before pulling back all the way to this original role reversal support. So we'll have to keep our eyes on that. What I'm going to do is just basically erase these crayon lines here and draw some lines that'll keep until next week. Again, could see a little bit of a bounce there, and then ultimately I think we're going to come down, break out below that moving average right there, and then test this support level once again. Look at the hinge that we see down here in the CCI. That's hinging up, hence the reason why I think we could rally a little bit in the diamonds. Remember that role reversal now. As you can see here, this is what I showed last week. A breakout of resistance, you generally get that run up and then a pullback to support. Remember, it's not a phenomenon, it's a common occurrence. It's more or less a behavior pattern that we see over and over in the market. So that's what we are seeing right now in the diamond. So I'll keep that intact for next week so you can see how those forecast lines worked out. Now with the Qs, if you recall, I had the report go out right here on that red candle, and I pointed out this long succession of green known as a stale green light. And I said that here too we could expect a pullback towards this moving average. We saw a little bit of a bounce, and the volume is increasing on the way up for the Qs. Again, the oscillators are starting to turn up. This is another one where I think we could see a little bit of a test of these highs back here. But ultimately, I think we'll pull back. I think there's a lot of nervous investors who are not fully committed to continuing on with their buy and hold strategies. But we have an awful lot of traders that are adding to the volatility. And I'm going to get to the volatility here in a moment. But my forecast, again, for the Qs is a little bit higher next week. And then I think we're going to come right back down to test that support level known as the 20-period moving average. Keep an eye on this line right here. If I switch this to a weekly candle, it's going to look a lot different. In fact, the weekly candle today, ending this Friday the 12th, is showing a hanging man candle that is very bearish. That's the second most bearish candle right there, tied with a shooting star. The oscillators on the CCI here are pointing lower. So again, next week I think we could wind up lower, but in the early days of next week, we could see a little bit of a rally, and then again, like I said, a pullback to that moving average on the daily chart. Now, if we look at SPY, this is the S&P 500 on the weekly chart. We're seeing the same exact thing. We're seeing a hanging man there. We're seeing the oscillators starting to turn. I think we're going to pull back to this role reversal here that I've drawn on the daily chart. I'll switch to the daily chart so you can see that. It's already starting to happen. I do see this going a little bit higher like we saw in the diamonds, but again, by the end of the week, I think we could pull back a little bit more in the S&P. So my forecast for the S&P on the downside by the end of next week is 455.55, all right, 455.55, and that brings me to the VIX. Last week I talked about the possibility of us filling this gap. Remember, I put a guarantee out that ultimately one day that gap is going to fill. We came within $1 this week. On Wednesday, we came within $1 filling that gap. Saw this long shadow, which is bearish, and then it pulled back to the moving average. Notice down below right here, we have a cross below that momentum line. That generally means that for 2 to 4 more days, we could still continue lower in the direction of that cross. Remember, last week, we had a cross to the upside right here on that candle, and I said we could see 2 to 4 days of upside potential. Remember, that was on this candle right here. And if you just count it right there, using that momentum cross to the upside, again, I'll zoom in right there. See that cross right there? You could generally count on 2 to 4 days of upside when it crosses the upside, and 2 to 4 days to the downside when it crosses below. So we had 1, 2, 3 to the upside, form that long shadow, and right down. Now, what I'm going to forecast here is lower on the VIX, again, because of that momentum cross, but I think we're going to stop right at that support level. This is a great opportunity for those who trade calendar spreads, because if you're looking at diagonal calendar spreads especially, which is the ones that I promote and teach, this is an opportunity for us to lock in long-term lower volatility on those leaps that we buy. And then as the volatility starts to trend up again, we get to take in all that cash on the sell side of that spread. Now, if you don't know what I've just said, then again, I would encourage you to take an option course and learn how to make money by collecting time premium on spreads such as this that I've just mentioned. All right, so that is the VIX. Now, let's look at Ethereum. Last week, again, I talked about Ethereum being in that role reversal scenario. Same thing happened. We had the breakout of that high, and we're now starting to form this pivot point, which will most likely draw us back down to that former resistance, which is now support. So if I put my permanent lines in there, or semi-permanent, I guess you could say, at least they'll hold till next week, I think you could see just a little bit of a downturn early Monday and Tuesday, but I think that'll accelerate later in the week. I'm going to end that target for Ethereum at $40.48. Now, out of all the markets that I'm looking at right now, I am not convinced that the crypto / Bitcoin / altcoin market is going to continue in a direct correlation to the underlying markets. In fact, I think when the big sell takes place in the general markets, I'll even use the word crash, all right, I think that many investors are going to be scrambling for safe havens to park their money. So I wouldn't be surprised to see Ethereum up there at around 8,000, possibly 9,000 in the next 6 months. Again, don't hold me to that, just my forecast looking at the general markets and how investors tend to park in safe havens. Bitcoin, again, I'm going out on a limb by saying this, but I think we could see 100,000 Bitcoin in the near future, or not too distant future, I should say. FYI, I am playing in the altcoins and tokens, having a great time. I'm not going to claim to be an expert in the crypto market, but I am in the technical analysis charts. You can apply these techniques, especially role reversal, to any crypto coin, any Bitcoin, any altcoin you want, and you have less to going on the fundamentals, so more people lean towards the technicals. Now, finally, one of the reasons I continue to hold my long-term bearish opinion in the market is actually supported by what we saw come out recently here. This is according to the University of Michigan. Check this out. The inflation expectations here, right here, is the second highest level we have seen in 20 years. Now, one other thing I want to point out here, this is still trending higher if you look right there. So it's not over. We could see the highest level of inflation expectations to hit us in the near future. And look where this high is. If you look straight down, that is right at the crash of 2008. Coincidence? I think not. When you combine this not so transitory inflation data with what we're seeing in earnings and such from the Bureau of Labor Statistics brought to us by Bank of America Global Research here, look at this dark blue line. This is real wage growth by the highest wage industries right here. And that line right there has just broken recently to a new 20-year low. So inflation is going up, wages are going down, and you can even look at some of the sectors. This is scary stuff right here, folks, because look, there's no wage growth here in transportation and warehousing, and even in the top sector here with leisure and hospitality, you're still looking at the majority of red down here in all of the other industries. So again, high inflation, lower wages, people get scared, they tend to buy less. That affects earnings in major corporations. And again, I'm not budging on that stance. That is my punctuation mark to what I'm going to say here for you with regard to risk management. I'm going to continue to pound the table on risk management. If you have profits, make sure you learn how to trail your stops. That's all I'm going to say. If you have a stop down below this moving average and your stock has gone higher, learn how to trail your stop. Move your stop up to protect those profits and lock those in so that you don't subject yourself to a catastrophic loss should the markets turn down like I eventually believe they will. So that's it for now. You have a great rest of the week, and we'll talk to you soon. So long.